This is Alan Bush with ADMIS with the Daily Financial Forecast for Thursday, December 10th. Starting out with the stock index futures, we are seeing prices higher this morning. Not a lot of news, very few reports that would move markets this morning, and yet we are putting in a very good performance. Also, keep in mind that December is the best month of the year for global stock index markets, even though so far this month we have seen a rather flat price change in U.S. equity markets. I think that we will see better prices later this month, especially after the Fed meeting is out of the way. Don't forget that the next FOMC meeting is scheduled for December 16th, and it is widely expected that the Fed will raise rates at that meeting. So once that meeting is out of the way, I think we could see a strong finish to the year for all of the major stock indices. Also, I do think that we will see continued strength into next year. Now, moving over to the currencies, a rather severe drop yesterday in the dollar index, some short covering today, also some strength in the dollar. Not so much due to anything here in the U.S. report-wise, but due more to some of the reports that we did see overseas. For example, the French non-farm payrolls showing a rather stagnant number, so that hurt the euro currency. We also are seeing the pound a little bit better. This after the Bank of England voting 8-1 to keep credit policies unchanged and their key interest rate at a record low 50 basis points. Also, we had the Swiss National Bank maintaining current interest rate policies as well with a record low rate there in Switzerland. Also, we had comments from the Swiss National Bank indicating that the Swiss franc, in their words, is significantly overvalued, so they are threatening the possibility of intervention to keep the Swiss franc from rising too fast against other currencies, especially against the euro currency. Also, the biggest mover in the overnight trade is the Australian dollar, up rather sharply. This on news that employment in Australia increased last month by 71,400, and that accompanies the unemployment rate that showed a decline to 5.8%. Also, we had good gains in Australia's employment numbers last month, so this is the best back-to-back employment gains in Australia in almost 28 years. So good gains in the Australian dollar due to better than anticipated employment numbers. Now, moving over to the interest rate markets, a rather mixed trade right now, but we do feel that longer term, the bond market, the 30-year bonds will probably come under pressure as core inflation levels gradually start to show increases around the world. And this is really not talked about very much. Most analysts are still thinking about prospects of deflation. So these are the very, very early stages of inflation with what we are seeing. You know, I'm talking about core inflation. So that should be a driver to the downside longer term for the 30-year bond futures. Also, getting back to the Fed meeting, there's an 85% chance that the Fed will raise at their upcoming meeting, which we totally agree with. So we do anticipate a rate increase from the Fed on the 16th. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.